Hello traders, what is going on? Welcome to our channel Trade Empire. Today in this video, I will explain about the Heikin Ashi, which is very useful candlestick pattern for the traders. I will also explain a Heikin Ashi trading strategy in very simple way. But before going ahead in the video, if you are new to our channel, then hit the like button and subscribe our channel, so you can keep getting this type of informative videos also in future. Now let us understand about the Heikin Ashi. Heikin Ashi is one type of candlestick pattern. It is a Japanese word, its meaning is average bar. Heikin Ashi uses the average price data, thus it refines the noise of the market and it can show a very smooth chart. So, with the help of this Heikin Ashi chart, we can easily understand the trend of the market and we can easily get the assumption of the pullbacks and the market moves. Let us now understand the calculation of the Heikin Ashi candle. For the open of the Heikin Ashi candle, addition of open and close price of previous Heikin Ashi candle is done, and after that it is divided by 2. So, we can say that the open of the Heikin Ashi candle is the average or middle of the previous Heikin Ashi candle. Now, for the close of the Heikin Ashi candle, addition of high, low, open and close of the normal candlestick is done and after that it is divided by 4. High and low of the Heikin Ashi candle are same as the high and low of the normal candlestick. Here we have the chart of a stock, which is in the uptrend. This chart is based on the Heikin Ashi candlestick pattern, and this chart is based on the normal candlestick pattern. You can see the difference. Both the charts indicate that the price is in the uptrend, but this Heikin Ashi chart moves in the uptrend gradually, and all the candles are bullish. While on the other side, the normal candlestick chart also moves in the uptrend, but not as smoothly as the Heikin Ashi chart. And there are many bearish candles in the chart, which do not make much impact on the market, but create some noise in the market. The traders generally get some confusion while reading this normal candlestick chart. The Heikin Ashi chart is so smooth to understand, and with the help of this Heikin Ashi chart, we can get the assumption of the next move of the market more easily. Every candle gives some specific signals. The traders should catch and understand these signals, and they should trade effectively according to the situation. So now let us understand about some candlestick patterns. As you can see in the chart, during the uptrend, the Heikin Ashi candles look like this. At the starting, we have this small bullish candle. As the price moves ahead, the bodies of the bullish candles increase gradually. Other thing is that these bullish candles do not have lower wick on them, they appear with upper wicks only. This indicates that the stock is in high uptrend, and the momentum of stock is very high. These types of candles show the presence of the large number of buyers. Now you can see these types of bullish candles. These bullish candles have small bodies as compared to the previous bullish candles. This indicates that the strength of the uptrend is decreasing. Moreover, these candles get lower wicks on them. It shows that the sellers have started to get into the market and they are pushing the price in the downward direction. But still the candles are bullish, so they indicate the buyer-controlled area. Now you can see the Heikin Ashi candlestick chart which is in the downtrend. First, we have this small bearish candle. As the price moves ahead, the bodies of the bearish candles increase gradually. Second thing is that, these bearish candles do not have upper wicks on them, they appear with lower wicks only. This indicates the presence of large number of sellers, and there is a high momentum in the downtrend. Now you can see these types of bearish candles. These bearish candles have small bodies as compared to the previous bearish candles, which indicates the downtrend is losing momentum. And upper wicks on these candles indicate that the buyers have started to get into the market, and they are trying to push the price in the upward direction. But these candles are still bearish, which indicates the seller-controlled area. Sometimes, you will see these types of doji candles with small bodies and large wicks on them. These types of candles indicate that the previous trend is going to finish in short time, and there is a possibility of the reversal. So, from now the price may change its trend. But after every doji candle, reversal does not occur. Sometimes, these doji candles indicate a small pause in the market, and after that, the market may resume its trend again. I hope you understood the Heikin Ashi clearly. So now we understand a Heikin Ashi trading strategy. In our strategy, we will use the Heikin Ashi with support and resistance level. First, we see an example for the buy setup. Here, we have the Heikin Ashi chart of a stock. Our first step is to find strong support or resistance level. You can notice that, at this level, the price has taken resistance for some times, so this is our strong resistance level. But here the price breaks out this resistance level. So, to conform our trade, we should observe the pattern of the candles at the breakout. Here during the breakout, two long bullish candles are formed which have no lower wick on them, so this is our trigger candle. We will buy at the high of the trigger candle. Our stop loss should be below the resistance line, and our target should follow our 2:1 risk-reward ratio. You can see, after our buy entry, the price made a strong up move. Now let us see an example for the sell setup. Here we have the chart of the stock. First, we will find the strong support or resistance level. At this level the price has made support for some times, so this is our strong support level. Now here, the price is breaking out the support level. But we have to check that the price breaks the support level with appropriate candle pattern. Here during the breakout, there are two big bearish candles with no upper wick on them, so this is our trigger candle. We will sell at the low of the trigger candle. Our stop loss should above the support level, and our target should follow our 2:1 risk-reward ratio. You can see, after our sell entry, the price has made a good down move. That was all. Dear friends, if you like this video, then give many likes to our video, and I know the real smart people will definitely subscribe our channel. Take care of yourself.